Alright, let's dive deeper into Japanese candlesticks. The candles I mention in this video will not be applicable to the HA candles. This is strictly for Japanese candlesticks. There are no candles or candle patterns that are 100% correct. They can only give you a bullish sentiment or a bearish sentiment. Some traders use the candles religiously, and others really don't care about them very much. But every successful trader does know the essential names of candles and what they mean. These two candles can help you understand what other traders are thinking, or even give you direction in your own trading. Then we will go over some patterns using these two candles. First is the Doji candle. This is an indecisive candle or reversal candle. It is often found at the top or the bottom of a trend. There is virtually no change in the price from the open to the close of the candle. During that candle, there was an equal war between the bulls and the bears. So it has little to no body at all, with wicks on both sides showing the battle of the two sides. The second candle is the hammer candle. It is also known as a reversal candle. The body is small with a long lower wick and found at the bottom of a downtrend. It shows that sellers came in heavy, and once they were all gone, the buyers came in and brought the price back up near the open of the candle. There is also an inverse hammer. That is the exact opposite, having a big wick on top of a small body, usually found at the top of an uptrend, indicating a reversal to the downside. There are many candle patterns, but we will go over 3 of the main ones right now. All of these patterns can be reversed from bullish to bearish, so keep that in mind as I go over these. First, there is the bullish engulfing pattern. This is when the second candle's body completely engulfs the previous candle, showing the price started lower, but got bought up and surpassed the previous candle's high. It was completely engulfing the last candle, giving a good sign of a reversal in trend. Then there is a very similar pattern called the piercing line. This is when the second candle opens lower than the previous close, then gets bought up at least 3/4 the way back up. This is also a reversal type of pattern. Lastly is the morning star. This is a strong reversal pattern as well. The signal is the first candle being a red candle, showing a sell-off. The second candle is a doji that does not overlap with the last candle. Then the third candle is a green candle, resembling the first red candle. This pattern can be used intraday, but works best on a daily chart, with gaps between the 3 candles. With a pattern or not, it is common for traders to look at wicks to find support levels, to see exactly the bottom or the top of price action. When some traders see many candles with wicks underneath the candle, they will be bullish on the stock as they see that it keeps getting bought up every time it falls. If they see many wicks on the top of the candles, then they will be bearish on the stock, seeing that every time it tries to run, people keep selling the stock. Again, it is important to understand not just the shape of the candles, but the story the candles are telling you. They can tell you if more sellers came in at certain times or if more buyers came in at certain times by giving them wicks on either the top or the bottom. Or you can see a lot of momentum by bigger bodies, or see a battle between the buyers and sellers with the smaller bodies. So use the Japanese candlesticks and work with them and understand how they work and figure out if candles are a big part of your strategy or not. And I'll see you in the next video.